Hello all. In our previous session, we saw what shares are, when and how the shares are issued. We learned that what face value is and what is market value. We also learned about par, premium and discounted shares. If you haven't watched the previous session, then do watch it now. And yes, don't forget to hit the bell icon and never miss an update from Letstute. Back in olden days, share market used to kinda look like this. Share brokers came together at one place and sell or buy the shares they needed. Now people can buy the shares with just one click from the share market, like the Bombay Stock Exchange and National Stock Exchange.
Now, buying and selling of shares happens at the same time because you cannot sell your shares if there's no appropriate buyer, right? Now, just to understand how this process goes, let's learn it step by step.
Now imagine that a new company has issued the shares, that you have bought them in the year of 2016. Now you will be known as a shareholder. You have bought 500 shares of ABC Education Company at the face value of 50. Now since the shares were just issued by the company, market value will also be the same, that is 50. Now, what will be the amount that you will have to pay to buy these shares? It will be 500 multiplied by 50, which is equal to 25,000. Since you have bought these shares, you will also have to keep a track of how this company is performing, right? Because you don't want your investment to go in loss. So, all the information about the performance of your company, you can get it via the newspapers or television or from the stockbrokers or from the internet. Well, now in the year of 2017, the company makes a huge profit, and this year you have also received a dividend at 20%. Now in the year of 2018, you see that the company is still making good profit. At this point, you decide to sell your shares to get really good returns on your investment, as the market value of a single share has now reached 200. So, let's focus on what will be the total return that you will receive on your investment. Now, since you want to sell your shares, you will also need a suitable buyer to buy these shares. And for this, your share broker will help you. There are various firms like ShareKhan or registered share brokers who can help you to sell your shares. Now let's see how this process goes. You will go to your broker and tell that you want to sell your shares. As for the current market value, which is 200, and you have total 500 shares. So you should receive a total amount of 100,000, right? But your broker comes and tells you that you will get an amount of 99,410. So you ask your broker, where is the remaining amount of 590 is going? So your broker explains that he has charged his brokerage at 0.5% and there is a goods and service tax on the brokerage which is charged at 18%. As these companies are providing you a service, there are certain compulsory taxes like GST, SEBI charge, STT charge, that security transaction tax, and few other taxes are also involved. Here in this session, we will be focusing on brokerage and GST on the brokerage when the shares are sold and bought. Brokerage on each share is going to be 0.5% of 200, which comes to 1. Now, on this brokerage amount, companies are liable to pay GST at a rate of 18%. So the GST on brokerage will be 18% of 1, which comes to 0.18. So the cost of single share will be equal to 200 minus 1, that is the brokerage, minus 0.18, that is the GST on the brokerage, which comes to 198.82. So the total sum that you will get after selling your shares will be equal to 198.82 multiplied by 500, that is the total number of shares that you are selling, comes to 99,410, and that's the amount that your broker told you. But is this the only amount that you will get from these shares? So you received a dividend at 20%. So let's see how much dividend you have received on a single share. So you have received dividend at 20% of 50, which comes to 10. But do you know why we have taken here 50, that is the face value, and not 200, that's the market value right now? Well, always remember that dividend is calculated on the face value and never on the market value. So dividend on 500 shares will be equal to 10 multiplied by 500, which comes to 5,000. Here the total return that you will receive on your investment will be the amount that you have received after selling the shares plus the dividend amount, which comes to 104,410. Here we can see that the amount is more than 4 times. So here, in order to calculate the exact rate of return, there is a very simple formula. That is, the rate of return is equal to net profit divided by the sum invested multiplied by 100, which comes to 79,410 divided by 25,000. 79,410, which is your net profit, and 25,000, that's your sum invested multiplied by 100, which comes to 317.64%. Well, that's some great return, right? Now here we will always consider net profit. If you have just received the dividend, then formula can be dividend income divided by sum invested multiplied by 100. Now try to calculate the rate of return only on your dividend amount. And yes, don't forget to comment down the answers. Now till now, we have seen that how brokerage and GST is charged when you're selling your shares and how we can calculate the rate of return.
Till now, we saw how the shares will be sold.
Now let's quickly see what happens when someone buys your share. Now suppose an investor is interested in buying these shares. He will ask his broker to buy them for him. So we know that the current market value is 200 and the number of shares are 500. So the total amount is 100,000. Now on a single share, the broker will charge a brokerage of 0.5% and also there will be GST on the brokerage. But here, both of this will be added on the investment amount. Brokerage on each share is 0.5% of 200, which is 1, and the GST on the brokerage is 18% of 1, that is 0.18. Now the cost of single share will be equal to 200 plus the brokerage plus the GST on the brokerage, which comes to 201.18. Now the total sum that the investor will have to pay to buy these shares will be 201.18 multiplied by 500, which comes to 100,590. Now I hope you have understood that how exactly this calculation of brokerage and GST is done while buying and selling the shares. Also, keep in mind, when you are selling the shares, brokerage and GST will be deducted from the amount, and when you are buying them, brokerage and GST will be added in your final amount. Now during the exams, questions like this can be asked. Make sure to read the question carefully. If allowed, mark the important points in the question paper or write them down in your answer sheet. It is very important to collate all the given important information. I hope you have enjoyed this session. Don't forget to like, comment and subscribe to our channel Letstute. Till then, keep watching, keep learning. Thank you.